12 assets that make you rich, a friendly guide to building real wealth. 1. Cash. Cash is boring, until it isn't. It buys time, it buys options, and it buys you in when everyone else is panicking. The trick? Don't let it rot under a mattress like your grandfather's secret stash. Inflation will eat it alive. Keep it in a high-yield account, or something that pays interest close to the inflation rate. Think of cash as fuel, useless just sitting there, powerful when used at the right moment. So what does that actually mean? Cash isn't the endgame. It's the entry ticket to the game. Footnote. Cash loses value over time but creates leverage when opportunities appear. 2. Real estate. This one's the classic. Rent pays you, appreciation grows the value, and depreciation gives you tax breaks. It's the only investment where tenants literally buy the property for you. You can even write off enough to offset W-2 wages, if you know the rules. Add leverage into the mix, 20% down gets you control of 100% of the property. The tenants pay the mortgage, you keep the upside. Rome wasn't built in a day, but it still collects rent in tourist dollars 2,000 years later. That's real estate. Footnote. Real estate delivers income, appreciation, and tax benefits simultaneously. 3. Bonds. Unsexy but steady. Government bonds, corporate bonds, and tax-free muni bonds. High earners love muni bonds because tax-free income beats higher yields that get taxed. When rates fall, bonds climb. When rates rise, they sag. But don't dismiss them, institutions can't live without them. So what does that actually mean? Bonds are like the quiet friend in your portfolio. Not flashy, but always shows up. Footnote. Bonds provide predictable income and reduce tax exposure, especially for high earners. 4. Stocks and REITs. Ownership in businesses. The wealthy dominate here, holding most of the stock market's value. Technology made entry cheap: Robinhood, Fidelity, Schwab. Buy slices of Amazon or Apple with pocket money. REITs? They're stocks that own real estate and pay 90% of profits as dividends. Stocks teach discipline. REITs add cash flow. Together, they build wealth while you sleep. Footnote. Stocks and REITs grow wealth through ownership, dividends, and compounding. 5. Mutual funds and ETFs. Don't know which stock to pick? Buy a basket. ETFs like SPY, VOO, or Devo hold dozens or hundreds of companies. They're cheaper and more transparent than old-school mutual funds. Mutual funds hide fees, so check the fine print. But ETFs? Think of them like ordering the sampler platter instead of betting on one entree. Safer, simpler, still satisfying. Footnote. ETFs and funds spread risk by bundling multiple assets into one purchase. 6. Commodities. Gold, oil, whiskey barrels, art, maybe even cars. Commodities don't always feed you, but they protect you. Some outperform the stock market. Whiskey aging in a barrel can outpace your 401k if you're patient. Bitcoin sometimes gets lumped in here too. So what does that actually mean? Commodities are the hedge. When the paper world wobbles, the tangible world holds. Footnote. Commodities protect against inflation and diversify risk beyond paper assets. 7. Intellectual property. Ideas that pay rent. A song, a book, a trademarked phrase, a software code. License it once, collect forever. Musicians, authors, and inventors all live here. Royalties may seem small, but they stack endlessly. Every time a Christmas jingle plays, somebody's bank account smiles. Footnote. Intellectual property creates recurring revenue streams without physical assets. 8. Crypto. Polarizing but real. Some coins collapse, others mint millionaires. Mining, staking, or holding, there are ways to make money if you're disciplined. Keep it small. Think of it as 10% of your adventurous cash. Not your whole future, just your side bet. Footnote. Crypto carries high risk but offers outsized reward when managed carefully. 9. Collectibles. Watches, wine, handbags, cars. If people fight over it at an auction, it's a collectible. Values can soar, but it's niche. Buy what you understand, not just what's trendy. It's art and assets blended together. Footnote. Collectibles rise in value when scarcity and demand align. 10. Business. The ultimate wealth builder. Start something, scale it, sell it, or live off it. Businesses hold everything: IP, real estate, goodwill, brand recognition. That's why McDonald's is secretly a real estate empire in disguise. The richest people in the world didn't just invest, they built. Footnote. Businesses combine multiple asset classes and scale wealth faster than any single asset. 11. Tax-advantaged accounts. 401k, IRA, Roth, HSA. Growth without the tax drag. Teachers and engineers quietly became millionaires by consistently funding these for decades. Compounding tax-free is the hidden superpower. So what does that actually mean? The government gave you a loophole, use it. Footnote. Tax-advantaged accounts accelerate compounding by shielding gains from taxation. 12. Education and skill. The most underrated asset. Knowledge multiplies returns across everything else. Specialized skill solves problems fast, and people pay for that. $10,000 for 15 minutes of expertise? Happens all the time. Learn, adapt, and your value compounds faster than money ever could. Footnote. Education compounds like capital, creating leverage in every asset class.